Hey guys, so in today's video, I'm going to be teaching you everything you need to know about price action. So in this video, we're going to go through a full top-down analysis. So we're going to see exactly how you're going to use the higher time frames all the way down to the lower time frames so you can find and execute all of these A+ setups. So we're going to keep it short and sweet and we're going to jump straight into it. So here we are starting off on the daily time frame. And the reason why we start off on the daily time frame is so that we can get an understanding of the bias and we can see where the higher time frame areas of interest are. So first things first, what are we doing? What are we looking for? Well, we're going to identify key areas of interest such as higher highs and higher lows. So taking a look at this overall structure, what can we see? Price has created a higher low, higher high, higher low, and then it's broken this previous higher high right here and it's gone ahead and put in a brand new higher high. This means that price is in a uptrend. We are bullish. Therefore, our bias is that we are only going to be looking for longs. So once we understand that, we can then get rid of all of these joins and replace them with a nice line right here, which tells us that we've had a break of structure. After that, we're going to understand where the key areas are on this market. Well, first things first, we can see that we've got this nice fair value gap right here on the daily time frame. Just above it, we've also got another fair value gap right there. So this shows us that if price retraces all the way down into these areas of inefficiency, then we can start to look for lower time frame entries to go long. So that is our current bias. We've identified the daily areas of interest, which is these two fair value gaps. After we do this, we're then going to drop down to the 4-hour time frame. Now on the 4-hour time frame is where things get a little bit more interesting, and this is where you're going to bring in multi-timeframe analysis. So what can we see on the 4-hour time frame? Well, again, we can see right here we've had a break of structure. If we take a look, we've had a higher low and a higher high. So that means, again, we are very bullish on the 4-hourly time frame, so we can go ahead and start to identify key areas in the market. So again, we can see that we've got this nice fair value gap right here, and also we can see that we've had a sweep of liquidity. So we had this sweep of liquidity right here, and then price decided to run all the way to this brand new high. So this tells me that all the way down at the bottom, this is a very key area because it took out all of this liquidity, and this also pushed price in the upwards direction. So there's a catalyst down here on the lower time frames, which is going to be key when price taps into it. So once we've understood that, we can now drop down to the lower time frames even further, which is going to be the hourly time frame. Now, what can we see on the hourly time frame? Well, things now start to get a little bit more different. What can we see? We've now had a higher high, then we've had a break of structure from this high low right here, indicating that price has now had a market structure shift on the 1-hour time frame. So if we go ahead and mark this in, we can now see that right here we had the previous higher low, and from there price broke to the downside, indicating a shift in structure from bullish to bearish. So price has actually shifted to a bearish stance on the 1-hour time frame. Now, we're not swaying away from the fact that the higher time frames are actually bullish. We have to understand that, and this is where the multi-time frame structure comes into play, because we have to understand where we are on the higher time frames and also the lower time frames and how they correlate with each other. So yes, the hourly has flipped bearish. However, the daily is still bullish. Therefore, our overall bias is that we're bullish, but we understand that the lower time frames have to flip bearish in order for the higher time frames to continue bullish. Now, I know that was a lot of mumble jumble, so let me give you a real perspective. As we can see, we've put in a higher high right here. Now, in order for price to give us a higher low, the lower time frames have to flip bearish. And then when we get a lower time frame market structure shift, we again flip bullish in this leg of price, which is then going to give us this higher high. So when this leg is being formed on the higher time frame, it has to flip bullish. When the higher time frame leg to the downside is being formed, the lower time frames have to flip bearish. That's just how the markets work. That's how you put multi-time frame structure together to understand where we are in terms of current price action. Now, if any of these concepts seem out of touch for you, if this is something that you do not understand completely, I would highly recommend you click the link down in the description in order to join the VIP group At the moment, we are having a massive 50% off Easter discount. We're going to get 50% off the entire A to Z trading course, where I cover everything such as market structure, liquidity, fair value gaps, order blocks, order flow, premium versus discount, entry schematics, you name it, it's all going to be covered inside of the course. Again, like I said, you get lifetime access to not only the course, but also my daily trade analysis and everything else that comes with it. So if you guys are interested, if this is something that you want to learn a little bit more about, then click that link down in the description. But let's go straight back into this video. So on the hourly, we've flipped bearish. We are on our way, steadily making a move down. And what can we see? The 4-hourly fair value gap, which we identified right here, price has actually blasted straight through it, which means it's been completely disrespected. So we're actually going to remove this completely off of our charts because it's being disrespected. Now we go back down to the hourly, and where are we next going to be headed? Well, at the moment, the only other area of interest which we've got is all the way down at the bottom, which is this 1 hourly candle, which actually took all of that liquidity, gave us a break of structure, left a fair value gap, and gave us the higher time frame breaker structure as well. So this is a very, very key area in the market where I expect price to give us a reaction from. So now if we continue to drop down to the 15-minute time frame, can we actually refine this even further? Well, yes, we can. The last point of demand on this entire leg right here is this singular candle, which was the last point of demand. This is where the actual move originated from, which gave us the lower time frame and the higher time frame breaks of structures to the upside. This candle is the one that also took all of the liquidity and it left a fair value gap. So this is a very key area in the market. So we've refined that all the way down from the hourly to the 15-minute. So now our next step is to actually wait for price to come and give us a tap into this area of interest. And once it does that, we can then actually start to look for an entry. So like I said, we're going to sit on our hands and we're not going to do anything until we actually get that tap in. And as we can see, we get a tap right here on the lower time frame. So what we're going to do is drop down to the 3-minute time frame. And now this is where we're going to be looking for our entry confirmation. Now, in order for us to get into this position, we need price to tell us that it's actually looking to start moving bullish. Now, how do we understand that? Well, there's different ways. We have a bunch of different entry schematics that we can use. But to keep it nice and simple, we're simply going to be looking for a market structure shift. So the same way that the higher time frames are fractal, the lower time frames are also the same. We can look for a simple market structure shift, which is going to tell us that the markets have shifted from bearish to bullish, which is going to indicate to us that we can start getting into this position. So what are we looking at the moment? Well, we've got this lower low, lower high, lower low. So until we break above this previous lower high right here, we are then very, very bullish. Well, now what do we get? Well, we've got this lower high, which has just been formed, and this lower low. So now we need this to break in order for us to get that market structure shift. So we continue to play price on, and we don't get that just yet until we play around for a little while, and then eventually I believe price goes ahead and gives us that market structure shift. So price is still going ahead, and as we can see, we've now just put in a brand new lower low right here. So this would now be our lower high. So we need price to break above this lower high in order for us to get that market structure shift. And do we get that? Eventually we go ahead and we get that. So that means we have now flipped from bearish to bullish, which means we can now safely look for a position into this trade because price has told us that we are now going bullish. So now that we've been given that indication, where are we going to enter? Now again, you can use a bunch of different methods, a bunch of different entry schematics. You can use Fibonacci, you can use key areas of interest. Now for me, I like to keep it very, very simple. I like to find the area that gave us the market structure shift. And as we can see, we've got this fair value gap and this order block right here. So this candle is the one that took all of this liquidity, which is right here, took this liquidity, gave us a breaker structure to the upside, left the fair value gap. So for me, it is a very key and crucial area that I believe price will come back into. So now that we've understood that, we've done all of the hard work, we've identified the higher time frames, the lower time frames, we've now ended up at the entry schematic, which we are now looking to get into this position with. So once we've done all of that hard work, we're simply going to take our entry at the open of that candle. If you want to be safe, you can cover the entire move, so you can put your stop loss just below this lower low right here, because then if that gets invalidated, then the entire trend is invalidated. Or if you want to be a little bit more aggressive, you can actually put it just below that order block. Now for me, I like to be safe. I like to cover the entire area, because then just for the sake of a few pips, I'm guaranteeing that I'm going to be staying in this position. Whereas on the opposing side, if you were to, get in with a riskier entry and you shaved off the pips, then potentially price could come back, take you out as liquidity, and then continue from there. So just to make sure that doesn't happen to me, I like to cover the entire range like this. And then we now come to the next question, which is, where do we target? Now for this, we again have to go back up to the higher time frame, because remember, the higher time frame is bullish. So that means because we are bullish, we can target, if we wanted to, the entire range, because then we are expecting a brand new higher high. Now for me, yes, you can do that. Those are very extended targets, but you're going to be swing trading, because you're going to be in this trade for quite a while. As we can see, this move to the downside took a whole 4 days and 12 hours. Now, I don't have that much time to wait. So for me, I like to target the lowest hanging fruit. Now, what I mean by the lowest hanging fruit is, where can price go to immediately? Well, we've got a bunch of different fair value gaps that we created on the way down to this order block. So we can actually initially target all of these different fair value gaps and trail our stop losses all the way up. So if we wanted to, we could essentially take this as our very first target right here. And then we could also target all of these different fair value gaps up here, right? So once we've understood where we're also going to be taking our exit from this trade, we've understood where we're going to be putting our stop loss. Now the next thing to do is simply to just play price on, wait to get tapped in, and then see what price does. See, we've been tapped into this trade now, and as you can see, price start to move in our intended direction. Now, why is price moving in our intended direction? Because it gave us the indication down here that it wanted to flip from bearish to bullish. Once we understood that, once we understood the overall picture, and we understood where we are in terms of our structure, we are now in this position because price told us what it wanted to do, right? And as you can see, we are moving very, very nicely in profit. Right now, price is currently, what is this? Price is floating all the way. It went all the way up here to a nice 1 to 3.6 risk to reward. And if you had been riskier with this trade and you had shaved off your stop loss, then you could have got a nice 1 to 6 risk to reward right there as well. But as you can see, price pushed all the way up. And where did it actually go? All the way at the top. Now it closed out this fair value gap right here, and then it was pushing a little bit higher to this fair value gap. So as you can see, you have to understand your exits just as well as your entries. So that's pretty much the trade. We understood where we were in terms of our entire direction. So the daily was bullish, as we understood on the higher time frames. We then dropped down to the 4 hourly. We identified the last point of demand right here, which took this liquidity and gave us that breaker structure to the upside. We then came down to the hourly time frame. We refined all the way down to this hourly candle. We then came down to the 15-minute, and we refined even further down to this 15-minute candle right here. From there, we then waited for price to tap us into this trade. Then it told us it wanted to shift structure from bearish to bullish, told us that it wanted to go higher. We then entered the position using our entry schematics, and then we made profit. So I hope you guys understood all of the key concepts that I'm talking about. And again, if you are struggling with any of them, then click that link down in the description to become part of the VIP group. But that's pretty much going to wrap it up for this video. If you did enjoy it, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.